This is about to show you how cash value policies work, okay? And they're all pretty much the same. Whole life, index universal, variable universal, all of this, just bells and whistles. They all pretty much work the same, okay? So here we go. You have cash value, right? What they tell you is, Guillermo, you're paying premiums every month, right? These premiums, they're gonna go towards two things, which is your insurance and savings. We got insurance in case you die too soon, right? You got covered, and let's be saving money in case you live too long, right?
Yeah.
So we have money that's available in case when you're ready to retire, and you get something back, and then we have insurance in case you pass away too soon, right? This concept makes total sense. Would you agree with that? You ever heard of Dave Ramsey? Okay, so he's a big connoisseur of like not getting cash value policies. Okay, you should actually be licensed with Primerica, but the concept makes sense, right?
Yeah.
We never argue with any other life insurance company or agent about the concept. It's the contract that never fits this concept. Okay, so this is how it works. Got your savings account. Who'd you say you bank with? Bank of America?
Yeah.
So let's say Bank of America had an account. This account has 3 features. All 3 of these features, at least one of them is gonna make you smile, okay? I promise you. So let's say I work at Bank of America now. I'm like, Guillermo, come on in, come on back. I got this new account, it has 3 features and you're gonna love it, right? The first feature, Guillermo, is I know you've been working hard over there at Banana. You've been getting your money directly deposited into this account, right? Well, you may as well not come into the location and waiting all those lines and stuff that you hate anyway, because even if you did, all that money you've been getting deposited in here for the first 3 years, if you came and looked at your account balance, it would say $0. How would you feel about that? You wouldn't like it. Okay, wait. The second feature you'll love, because I know you gave away money for 3 years, okay? But after those 3 years, money will start accruing, okay? But if you ever step foot into this bank and withdraw $1 of that money, I'm gonna charge you interest on it until you pay it back, somewhere between 6 to 8%. I'll let you borrow your own money. You just gotta pay it back with interest. How do you feel about that? You don't like that either? Well, hold on, the third thing you love. We know that when a person dies and they leave a lot of money in an account, there's no will in place, families tend to fight over it, okay? And we don't want that happening to your family. So if something ever happened to you, Guillermo, and you left behind this large sum of money in this account, we don't want your family to fight over it, so instead of giving it to them, we'll just keep it all. How do you feel about that?
Bad as well.
You feel bad? Guillermo, you're a pretty smart dude, right? If you knew Bank of America had an account like this, would you knowingly open that account with them? Do you think that life insurance agent explains to the person or the client this is how that cash value policy works? What do you think they tell them?
Take the money.
Works like this, right? And so they listen to them. The number one thing I gotta do when I sit down with somebody is even open the policy because it hadn't even been read. This is how it works. You've been paying money into this account, right? A portion of it is going to savings. For the first 3 years, I've seen up to 9. It's $0 that you can actually pull. Once you do take that money out, it is a loan. You are borrowing money from yourself. Does that make sense to you? Right? You got to pay it back. 6 to 8% interest typically. The third thing in these whole life policies, you've been paying for 2 things for the past 20 years, right? Let's say you and your girlfriend get married 20 years from now, you have a face amount that you bought the policy for $150,000. Your cash value, let's say it's accrued to $50,000, right? You've been paying for 2 things for 20 years. Wouldn't you expect to get both of them if you passed away? Or the beneficiary?
Yeah.
Say your girlfriend's the beneficiary after y'all are married, she's gonna get the choice. Between 150K and 50, which one you think she's gonna choose?
50.
What do you think happens to this $50,000, Guillermo?
Bank keeps it.
Not the bank. Geico, Allstate, State Farm.
Yeah.
We are the only company that does not sell these because it has never been right for the consumer. I don't care. You're like trying to fix a car with a hammer. They have insurance in case somebody passes away, and they have savings accounts that you can actually do the things that you need to do with your savings, and that you get both if you pass. Does that make sense to you?
Yeah.
So these are the things, that's a little bit of the crusade.